All right. Hey everyone, today is Friday the 13th. Holy cow, I just realized that today is Friday the 13th. It's 8:30 p.m. January 13th, and it's a Friday. All right, so options expired today, so let's quickly look at what happened today, okay? Now, first I'm going to look at is Caterpillar. All right, here's Caterpillar right here. Let's go, and this is Caterpillar for the year. She made the high back the first week of December, 97 bucks. The low way back in January 20th of last year. So today she closes at 94.48. And what did we do? Well, do you remember last week we bought Caterpillar, or we sold the credit put spread on Caterpillar, and we ended up buying 1,000 shares first thing Monday morning at 93? Well, just so happens that Caterpillar hit 94.48 today. So she closed out. We got the 93 that we were looking for. So let me see if I can summarize this real quick. Last week, we sold at the credit put spread for Caterpillar. We ended up buying 1,000 shares. So last week, we got a 30% return for the credit put spread. Okay, that's a 30% return for credit put spread. Then first thing Monday morning, we find 1,000 shares at 93 for Caterpillar. So what did we do? We turned around and sold the weekly option for someone to buy it from me at 93, okay, for 80 cents a share. That's another $800. Okay, so that's $800 on top of the $400 or $500 we made last week, all for buying the stock at one price and selling for the exact same price. I love that one. Okay, so Caterpillar worked out good for us. Clorox, let's take a look at Clorox. CLX. All right, CLX, Clorox. July 6th had a high of 140. November 10th had the low of 114. The last 2 weeks, see some up, see some down. Here we go, since January 1st. Let's go see what our position was for Clorox. View trades. Okay, Clorox, 400 shares. Okay, so we actually bought 400 shares, and we tried to make the 80-cent dividend play, which didn't quite work right. But then again, Clorox still has another week or so before it actually hits the EX date. So it's about another week or so before Clorox hits the EX date. We're at 119.32, or sorry, 119.53. So she closes at 119.53. And we have 2 calls for next week. So we actually have 2 positions. One, we got 400 shares, trying to earn that 80 cents per share per thing. That's like 320 bucks. Not a big deal. And then we have 2 positions for 2 debit call spreads. The 115, 120. She's at 119.53. So hopefully we're looking for it to be above 120 by next Friday. Clorox is a good company. We might decide to jump back in to get some more positions come Monday, because come Monday we got 5 days for the option to expire. So that's a possibility. So Clorox is looking good. It's not bad. EPD is the next one. Okay, so EPD. Okay, EPD had a high of 713 at $30.07. The low for the year was January 25th of last year at 1967. Okay, what positions do we have for EPD? It is apparently 3 positions again. So we have 1,600 shares that we're looking to earn 40 cents per share on, which is not bad, since it's a nice little spread, and nice little dividend payment that if we can get it. And we also have expiring today the 27 and a half. So guess what? We didn't make the 27 and a half. So it looks like tomorrow morning we're going to buy another 1,000 shares of EPD. Which, don't get me wrong, it's not a bad play. I might just turn around and change the order on Monday. So if we're rather trying to get the 40-cent dividend play coming up, because 10 days from now, EPD is going to be hitting their EX date, and we have the 3 pieces of software that says, hey, EPD is going to go up. So great. So everything looks good. We're going to have another 1,000 shares. So all right, not a bad thing. Okay, GD, that's coming next. GD, and that's 177.89. Let's quickly go back and see what the high and the low of the year was. The high for the year for GD was 178 back the first week of December. All right, and the third week of January last year was the low. Okay, so that's good. So she has a nice steady up climb all year round. In the last 90 days, or last 30 days, this is what we're looking at. She's at 177.89. And what was our play for GD? GD was for next week. This one is cool. This one, 165, 170 call, way in the money. We can basically leave these alone. These are going to take care of themselves. That's good. So let's move it on. GEL. The GEL. Here we go. Okay, GEL had a high in July 19th, $40.83. The low was in February 11th of last year. And last 30 days, let's take a look. Right now, she's at 35.63. And what play did we make? We made the 37.5 for next Friday. So we have another five trading days before this one is. And we're looking to look at the 37.5. So we want her to go up just a little bit more. Hopefully she'll do that. And we'll check in on that one next week. Lows. Low W. I still get that cough from last couple of weeks. Okay, lows. July 12th, she had a high 83.40. The low last year, February 9th of 62.99. The last month, she's going down, but look at this. The last 4 days, she's going sideways with an uptrend on the 5th day. And let's see where we are today. She closed at 72.15. Lows, we make. All right, we made a trade for today, and we did the 70.5, 71 credit put spread. What does that mean? She's above 71, so cha-ching, this thing's going to expire worthless tomorrow. We made money on that one. Thank you very much. Okay, lows, we made money on that. PAA, here we go. Had a high of December 1st, 34.11, and the low last year of second week of February at 14.93. The last 90 days, this thing's been going sideways. I love sideways. Wait a minute, they had this little gap up right here. Okay, she had a little downtrend there, and then she hit a low 29.55. Looks like 100% volume increase on the 30th of November. She jumps up and she gets into the sideways trend here. Okay, so the first week of January, that's where we are now. She had 3 up days, bringing off then 5 down days in a row. Today we had an up day. So what was our position on PAA? Let's take a look. Let's view the trade, and that's a trade for next week. So we bought 10 contracts of the 30-31 puts. Okay. We sold the 31s, we bought the 30s. So this thing has to go above 31 or stay above 31 by the end of next Friday. Right now she's at 31.51, so she's right on the money. So we're looking good at PAA. Last one, VALE. Let's take a quick look at VALE. Now VALE, I love VALE. Why? Oh, let's go back for a second. Quickly do an analysis on that, let you know. VALE had a high of today. Today's the high for the year. 973 was the high. The low was 228 last year. Can you imagine that? 220, the low 221. Okay, so she had a low of 221 last year. Buy this thing last year at 221. Now she's at 958. Whoa, that's awesome. Okay, so what position did we have? I'll tell you what position we had because I remember this one. This is a good one. Okay. The very first week of the year, we sold the 7.5 put credit spread. What happened is the first week she closed below 750, so we ended up buying 1,000 shares last Saturday at 750. So what did we do? First thing Monday morning, we turned around and sold the 8 calls because we had 1,000 shares and we wanted to sell 10 contracts at 8. Someone to buy it from us, 40 cents, made a nice return. So we made a nice 30-40% profit in the first week of January. Second week of January, we made another nice profit. I don't know what it is right off the top of my head, but 40 cents for every share, 1,000 shares, that's $400. Not a bad move. Anyway, right here, check it out. $891.55 profit for the week. I can deal with that. Buy it at $750, turn around, resell it at $8. 5 days later, make a nice $891 profit. Gotta love it. It brings our total profit year to date $7,193. Okay, for the second week in January, we're already way above our average. So anyway, this is James. I'm gonna check back with you on Tuesday when we go back into some dividend capturing and looking for the new list coming out next Monday. So you guys, talk to you later. Have a great day and happy trading.